If you're looking for professional day trading education and high-level trade analysis and dissection, you've come to the right place. My name's Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to bring you exactly that. Professional day trading education, all here for free on YouTube and on X. And today we are going to be discussing a one-and-done trade, but I'm going to more specifically go into how to work a trade in a volatile market, which is this type of market, when we are irrational and extended and everything else. And a lot of people are expecting a big crash, which it's not due yet. So give me a sec. We're going to fire up these charts. We are going to rock and roll. I hope you all had, come on now. I hope you all had a wonderful day. I certainly did. Let's do this. Okay, folks. So for those of you that are just joining us, just a quick little heads up here and a little bit of housekeeping. These blue levels or any levels that you see on these charts, they are placed prior to the market open. It's never after the fact. We work through preparation and trade planning. So these levels were placed at 9 a.m. East. I develop a trade plan surrounding them. Generally speaking, the top level is a short, the bottom level is a long, and the trade plans for today, I might as well fill you in, are as follows. So what we were looking for at the open, if we came straight up into this level, we would execute that as a short. And at the open, if we dipped, we came down into this level, we would execute that long. If it wanted to keep going without a bounce, we would basically be risking off of this pre-market lows, which is also another level, which is basically the previous close. So lots of protection in the long. And actually, to be honest with you, I did want the long in the morning. Because if we opened and came straight down into this, this is a major trend. It's above trend. Plus, we have the previous close as protection. So if you take a look, we came down into the price point of 688.16, which is more than fine to execute there if this is your main and only level. When you add this on top of it, it's not too wide, but you really want it closer. For this market, you want to tighten up those entries. It's really important to keep things tight. So we didn't get the entry, and that's okay. Sometimes that happens. It's going to happen a lot, actually, in your trading career. But you can see that it did trigger later on. But so instead, what we looked for and what we waited for was a short. Now, because of the level of protection, I talk about that a lot on this channel. We dip down, we come back up. So when we come into here, that first line of defense, the first line of resistance, because it's such a minimal amount of risk, it's only 50 cents, I am going to start in there. Okay. So if you're racing up into the first level of resistance and you have your actual entry, right? And there's nothing really above that, you're in a protected trade. So the odds of it doing something like this, so it dips down and it comes all the way up, it just does something like that and stops you out, are very, very minimal, extremely minimal. Can it happen? Sure. But that would be like worrying about crossing the road while you have a walk sign to actually walk and cross the road at a set of lights, and you are constantly paranoid that you are going to get hit by a car. You would be a fucking lunatic if that is the case. And that's the same thing here. So that's why we start working the trade and start averaging all the way up here if it came straight up. Now, that's not what happened. What ended up happening is we started playing in and around like this. Okay. So you're going to see entries and real tight sells. There's a reason for that, because right here is your first level of support on the way down. And I kind of fumbled that. That's a little better. So it came right down into the first level of support. That's micro technicals. Okay. That's what I call natural levels. And you'll see that if you actually study this, my natural movement theory, which there's a little bit more than what I just told you here, it is a price action method that it basically gives you a crystal ball. It's like being able to see the future. You'll know where it's going to come down into and where it's going to come back up into. You'll know within about 6 to 8 moves exactly what's going to happen next, because it has to do that. These stocks trade naturally, right? There's nothing erratic or irrational about it. So once you understand natural movement theory, which I go into great detail about that inside the walls of trick trades, then you understand exactly why and where you need to pay yourself. And that's why you see those top ticks. So I'll clean up this chart yet again, and I'm going to draw that level. So it comes back up, and I'm going to re-enter into natural, which I did. Okay, right into there. When it falls back here, I need to pay myself. Now, I'm not exiting the full position. Okay, I'm working with more contracts than that, or shares, doesn't matter. So, but I'm playing with that chart and I'm keeping it real tight. And there's a reason for that. So just because the market is extended, that doesn't mean that it's automatically going to be a day that it's a short. It's an immediate short. That's how a lot of like really new, like newbie traders will think about this in terms of that. But what they need to understand is the irrationality of the market right now. And even with it selling off, what did it do? It got bought right back up. So what also was happening is this red candle here that touched. And then where else was that? I can't remember. Oh, yeah, there was one here, wasn't there? Yep, right there. And I think there was actually one more. There's a lot of red candles that a lot of people will immediately think that that is a sell. It's not. And it's the way that it comes down and gets sucked back up. There's a little more to it than that. I'm not going to get into it right now, but it's actually somebody buying, and it's their orders getting filled. Okay. So, and they weren't small positions either. They were 150 to 200,000 shares of volume. So when you see something like that, it's either a trap or it's institutional buying, right? And this is what I talked about before. You start when in this market, if you watch my previous trade recaps and trade analysis, you're going to see that I talked about you will start to see in this market institutions start masking selling into retail buying. Okay. So there was definitely some evidence of that today. Okay. So it's starting. Now it's not at the point where they're getting out major. You're going to start noticing volume increasing during those times. Okay. So I'm going to do a video on that. So then you guys are more than prepared and you'll know exactly what to look for and what to watch for. So a video on that is coming. But on this here, essentially, I'm working that trade. Okay. So when it pops up and it comes up and touches that level, I'm going to execute, get the best price, and then immediately pay myself as a target into here, which was where that support was holding before, which is exactly what I did. And then simply just continuing to work the chart. Now, what I did here was I didn't want to continue on because this has a tendency, and the odds are now increased of it squeezing. So what you want to wait for instead, and I'm going to clean up this chart to show you guys now and zoom in and stretch it out. So what we have here is we want it to come up, slice through, pop back up to retest. And your entry is on that pop back up. It's that retest. Now, it didn't quite give a perfect retest. It happened very fast, but it's very close. And your risk is very minimal. So as soon as that candle starts going green on the way up and it comes within a threshold of reasonable and responsible risk, I will execute that trade. And that's where that ad was. So that ad made me some more money and paid myself on the wash all the way down. And that's basically it. Now, I could have continued on with this trade, but I generally, especially right now, only trade the first 1 hour of the market open. That's it. But I think the main lesson from today is how to work those tight ranges. So let's take a look at this first little bit of my chart and my trade. So you see this? if you take a look at that, right, from where I entered, where I paid myself, where I entered, where I paid myself, where I entered, where I paid myself, right? And it ends up coming up and it basically breaks that level. One could make the argument right here, and I've talked about this before. So just this part, not the other part of my trade, but just the first part, that is a failed trade. So on that failed trade, I still locked in about $3,000 on a failed trade. And what traders need to understand, and this will take a lot of years to really understand this on your own without somebody telling you, if you ever discover this, that trading isn't about executing trades. You can execute anywhere on that chart. It is about the management technique of that trade. Okay. It's not the trade. It's not the trade idea. It's the management. And I've proven this before time and time again in my live trading course, which is called Momentum, where depending on the class, I would basically allow my members, the traders that are in that, to call out to enter long or short, wherever, whenever. And I would enter, and then I would simply manage that trade. And they would obviously try and make it difficult. They would tell me to go long or to go short in the worst possible position. Okay. And it's through management that I can still be green. And it's all done live. It is management technique, right? And that's the important thing. It's not, all of it is an illusion. It's not about the trade or the trade idea. It is about simply how you manage these positions. And this is why it's so important and so crucial to work with a trader that has been doing this a long time, been doing this over a decade, right? What you don't want to do is start working and paying traders to teach you how to trade that have been trading for a couple of few years. They're going to tell you a lot of things that they simply just aren't there. They have no business teaching at that point. They just don't, because they don't know what they don't know. Their experience level just isn't there yet. Okay. So on that note, if you do want to come learn how to do this, come to tricktrades.com. If not, enjoy the free stuff. There's literally 1,000 videos on my channel. Go right ahead. Okay. That's why it's there. But it will fucking take you so much longer to do so. So if you feel like you have literally all the time in the bloody world, then go the free route, man. And if not, you're serious about this, come to tricktrades.com. Okay, guys, I hope you have a wonderful evening, and I'm going to see you all tomorrow. Adios.